Few names are as well known in the rapidly changing fields of technology and finance as Cathie Wood's ARK Invest. Almost 8% of her investment portfolio is dominated by one name, Tesla. However, why this pioneer of electric cars? What's the secret recipe that has ARK Invest placing such a large wager on Tesla's future? Let's go into the thrilling specifics now. We'll talk about the AI-driven strategy that underpinned Tesla's explosive growth, how Robotaxi has the potential to change the industry, and if this is the right time for you to become involved. Hold on, though, don't buckle up just yet. Our journey towards autonomy may not go as easily as we'd want because the road may be tortuous. We can't wait to show you this video, but first, please click the like button and subscribe to Tesla Stock News so that you can receive future updates. Now that we have cleared it out, let's start the video. For the leader in electric vehicles, the promise in software may be undervalued. Tesla stands apart in part because of its remarkable record of electric vehicle sales. Over 5 million electric vehicles have been delivered by Tesla to consumers worldwide since its founding. These aren't simply figures, they show a real movement in consumer preferences in favor of environmentally friendly transportation. Customers' hearts have been won over by Tesla's cars, which have completely changed the way we think about EVs. Upon closer examination of Tesla's future ambitions, the idea of robotaxis becomes apparent as a potentially transformative prospect. Forecasts from the market confirm this promise, with the self-driving taxi sector expected to increase at an astounding 91.8% each year between 2023 and 2030. A thorough research by Markets and Markets indicates that Tesla is leading the charge in the transportation revolution as a result of its exponential development trajectory. The capacity of Tesla to collect and utilize data from its large fleet of automobiles is another noteworthy feature. Since Tesla vehicles are driven all over the world, the business is continuously gathering a vast amount of data about actual driving situations. Tesla uses this data to power its cutting-edge Dojo training computer, which is essential to the company's continued advancement of autonomous driving technology. As a result, performance and safety continue to improve, bringing Tesla one step closer to being fully autonomous. When we look at Tesla's potential for software licensing, Cathie Wood's assessment of the company as a software-as-a-service AI platform becomes more credible. During Tesla's most recent earnings call, Elon Musk himself verified that the company is actively seeking collaborations with large manufacturers to license its whole suite of self-driving hardware and software. This calculated action might open up new sources of income, increase Tesla's market share, and strengthen its standing as the industry leader in tech-driven automobiles. It is important to stress Tesla's efficiency and scale in producing electric vehicles as it prepares for the eventual deployment of robotaxis. Tesla has continuously increased its profit margins by utilizing economies of scale and creative manufacturing methods. This, along with its capacity to produce EVs, puts Tesla in a position to enter the robotaxi business smoothly when the legal environment allows. Tesla has the ability to outperform its competitors in the market, even in the event of regulatory obstacles or development delays. Despite representing a premium valuation, its comparatively high price-to-sales ratio of 9.3 is supported by its well-established strengths, strong brand awareness, and future potential in software and driverless vehicles. Keep at least a small stake in Tesla for investors looking to gain exposure to the electric and autonomous driving revolution. The company may yield significant long-term returns. Our investors find great beauty and sound in these data. Because of its audacious investments in high-growth firms, Cathie Wood's ARK Invest has become well-known. Wood's extraordinary ability to cut through the noise of cyclical market changes is the foundation of her reputation as an investment maverick. Rather, she steadily navigates her investment vessel by keeping her eyes fixed on the distant future. When building her exchange-traded fund portfolios, Wood is a fervent supporter of Tesla, with the stock making up a sizable share of ARK's overall holdings. More precisely, it represents the largest investment in the portfolio at 7.9%. Tesla has a weight of 10.8% in the ARK Innovation ETF, which amplifies this significant investment. Wood has high hopes for Tesla's future, which are shown by ARK's most recent study, which was released in April. By 2027, she believes Tesla's stock price would soar to an astounding $2,000 per share. This estimate is based on a thorough analysis that takes into account a number of variables, such as sales, profitability, and the anticipated stock valuation. Interestingly, the company still thinks that Tesla's shares might be worth $1,400 even in ARK's worst-case scenario. These predictions are based on the fact that Tesla is a leader in artificial intelligence and has a strong track record in data collection. Two things that are essential for developing its self-driving technology to the point where it can outperform human drivers. As a result, RK predicts that by 2027, the robotaxi industry would account for a sizable amount of Tesla's earnings. It is important to remember that Tesla's stock has already quadrupled in value this year, demonstrating impressive growth. Still, compared to its all-time high of $414 per share, it trades at a 39% discount. At the present share price of $252, investors may realize an incredible eightfold return on their investment if Wood's prediction of a $2,000 stock price by 2027 comes true. The success of ARK Invest's Robotaxi initiative is a major factor influencing its optimistic forecasts for Tesla. During the first quarter earnings call in 2022, Elon Musk, the CEO of Tesla, made an audacious announcement regarding the ever-changing world of electric vehicles. He stated that Tesla hopes to begin producing robotaxis in large quantities by 2024. In line with what Musk said, ARK Invest predicts that Tesla will probably start selling its robotaxi services in 2024 or 2025. ARK's estimates, however, take into account various possibilities for various launch schedules. The implausible scenario of robotaxi commercialization in 2023 is given a 22% probability, while the chances of it happening in 2024 is given a 33% chance. A 30% possibility is given to the year 2025, a reflection of the complexity of an undertaking this revolutionary. The research by RK presents a convincing image of Tesla's prospective revenue stream in the future. They predict that Tesla might generate over $1 trillion in sales by 2027. Interestingly, 44% of this astounding amount is anticipated to come from robotaxi operations. It is anticipated that electric vehicles will account for 47% of revenue, with the remaining portion coming from a variety of sources including insurance, human-driven ride-hailing services, solar panels, and energy solutions. But it is imperative that the issue of timing be addressed. Musk's original goal of having robotaxis in production by 2024 might seem ambitious, mostly since it gives just a small window of time for thorough testing and obtaining the necessary regulatory licenses. Although there has been some progress, with a few robotaxi businesses receiving approval in California, safety issues remain significant and require close examination. Moreover, Tesla must overcome the difficulty of gathering enough data to surpass human drivers in terms of autopilot performance. The Dojo training computer, an essential part of Tesla's autonomous driving system, is making great progress, but it is still not nearly where it should be. During the second quarter earnings call, Musk himself admitted to being over-enthusiastic in his earlier forecasts about the development of fully autonomous driving capabilities. Considering these factors, it may be too optimistic to purchase Tesla stock expecting robotaxi deployments to send the company to new heights in the near future. However, it's important to emphasize that investors do not have to rely only on ambitious growth projections from fresh projects to support their Tesla investments. For those thinking about the company's long-term growth potential, its current standing in the EV market and continuous improvements make it an interesting proposition. As usual, Tesla has set its sights on a huge opportunity, the field of robotaxis, led by the visionary Elon Musk. Robotaxis has been openly hailed by Musk as a huge potential development path for the business. This view is supported by market predictions, which show that the self-driving taxi industry would grow at an incredible annual pace of 91.8% between 2023 and 2030. Markets and markets analysis indicates that Tesla is in a great position to take advantage of this growing market's potential to become a major player in the transportation sector. The main source of Tesla's competitive advantage in this market is the considerable number of cars it already has on the road. These cars serve as information-gathering devices, sending data incessantly to Tesla's state-of-the-art Dojo training system. This priceless information is crucial to improving Tesla's autonomous driving skills and opening the door for a time when its technology will outperform human drivers in terms of dependability and safety. Renowned investor Cathie Wood views Tesla as a powerful player in autonomous driving software in addition to being an electric car maker. According to her, Tesla is changing into a possible AI software as a service platform, which could greatly increase its worth. Interestingly, Wood is not the only one who has this viewpoint. Elon Musk has stated that he is willing to grant other automakers a license to use Tesla's whole suite of self-driving hardware and software. In an announcement made during a recent earnings call, Elon Musk said that Tesla was already in talks with a large automaker about using its autonomous software. Such a step might improve Tesla's already remarkable profit margins and lead to new sources of revenue. Tesla has demonstrated in the past that it can increase profit margins by developing new methods for producing electric vehicles. The company is well positioned to take advantage of its experience, efficiency, and scalability to implement these autonomous vehicles with the highest level of precision as it prepares for the eventual approval and deployment of robotaxis. The market for electric vehicles is gaining traction, and this has increased rivalry from both new and established automakers. Well-known behemoths like Volkswagen and GM have put a lot of money into expanding their EV product lines. Tesla's pricing power and market share are threatened by this competitive environment. The path to complete autonomy is paved with complicated regulations. Getting permission for autonomous vehicles is a complex process, especially when it comes to commercial applications like robotaxis. Safety requirements and laws must be followed. Tesla's timeframe for robotaxis deployment may be seriously hampered by delays or strict regulatory constraints. As an extensive fleet of networked cars gathers data security, and privacy issues become critical. One of Tesla's most important duties is to make sure that consumer data is kept safe and handled responsibly. Timelines for manufacturing and production have been impacted by interruptions in the global supply chain, as has happened in many other industries. Vulnerabilities in the supply chain can make it more difficult for Tesla to satisfy demand, from problems with logistics to shortages of semiconductors. Even while regulatory issues or delays in development could present difficulties, investors in Tesla's stock could still see profits that exceed the market. For an industry leader with a bright future, Tesla's premium value is not surprising, despite the company carrying a relatively high price-to-sales ratio of 9.3. Tesla is a tempting addition to a well-diversified investment portfolio due to its long-term growth potential, current strengths, strong brand recognition, and future opportunities in software and robotaxis. Investing in Tesla, even in a small way, may provide investors a front-row ticket to the revolution in electric and driverless vehicles. There you have it, gentlemen. We've spoken about how the journey of Tesla is an intriguing blend of opportunity and difficulty. Its pursuit of autonomous driving, software innovation, and electric mobility is nothing short of revolutionary, as we've seen today. Investors such as Cathie Wood are drawn to Tesla because of its